Arjuna Mahendran, Head of Investment Strategy at HSBC Private Bank, which helps manage almost $500 billion in assets. Many thanks for joining us this morning, Arjuna. I must ask you, first of all, there we go, buy cheap financials, bottom fish, it's a great opportunity.
Indeed. I mean, you know, of course, we would be cautious about some of the financials. We have to be selective here. But, you know, if you're looking at the JP Morgans in the United States or some of the European banks like BNP, etc., where you know, there's clearly a sort of a national interest, if you like, behind the bank, I think for the long-term investor, these are definitely opportunities. But I'm more interested in the Asian financial institutions in particular, because I think that in this environment of rising interest rates, when this monetary tightening comes to a halt, which I expect would happen sometime in the next 2 to 3 months, then you'll see volumes of lending starting to rise once again, and the profitability of Asian banks, particularly in China, India, the large markets, Indonesia included, would, I think, start rising. So I think this is a great opportunity to pick some of those emerging market financial institutions.
Arjuna, giving us some names on your radar, which particular banks do you favour the most in Asia?
Well, in China, I mean, we like China Construction, CCB, and ICBC, Industrial and Commercial Bank of China. In India, I would, you know, look at HDFC and some of the private banks, which I think have done better than the state-owned banks. And of course, in Indonesia, you have BCA. That's been a perennial favorite of ours. These are all banks which, you know, continually generate stronger loan growth, particularly to the consumer, the domestic consumer segment, which really is, I think, the silver lining in this whole slightly dim environment. It's domestic consumption in Asia that's going to drive these economies forward over the next 3 years. And it's the banks who are going to do the funding of that. So in a rising interest rate environment, that spells profit for me, for the banks.
You also recommend staying with gold and buying into the yen, and you have been advising clients until perhaps today, to buy the Swiss franc against the euro and the dollar. But how does the overnight Swiss central bank movement to cap at 120 change your view on that?
Well, obviously, in the short term, the Swiss franc is probably not going to do very much. But, you know, when you look at the experience of the Swiss National Bank itself earlier this year and late last year, when it tried to defend its value against the dollar, it was a miserable failure after about 3 months. And eventually, you know, there's only so much a central bank can do unilaterally unless it's assisted by other banks, particularly the Fed. And in this case, I think that's expressly not the case. So I would still be heavy on Swiss francs, though having said that, in the short term, there might be an opportunity just to borrow Swiss francs and perhaps invest in other currencies like the Norwegian krona, which could probably appreciate in the meantime. So from a carry trade perspective, you know, the Swiss franc might be interesting as a borrowing currency.
Arjuna, overall, of course, being the head of investment strategy at HSBC Private Bank, again, you're getting a lot of calls from clients who are probably very concerned about the global economy. We've had HSBC, in fact, cutting their growth forecast for the global story overnight. What is your take? What are you advising your team to tell your clients?
Well, I mean, the economic view of HSBC is clearly that we are in a form of permafrost. You know, you're not going to see a big thaw and a reversion to the pre-2008 sort of growth scenario for a long time to come. But having said that, from an investor perspective, you look at, say, the experience of Japan in the early 90s, you know, after the housing sector, the property sector in Japan had started collapsing in '89, you saw the stock market still continuing to stay at high valuations of 60 times for about 4 to 5 years after the property sector had started collapsing. So, you know, there's no indication that profitability in the corporate sector in the United States and across the world has started sliding as yet. So I think there are still opportunities out there, despite slow economic growth.
Thanks for your time this morning. Arjuna Mahendran there. Thank you for your time. HSBC Private Bank, Head of Investment Strategy, joining us there from Singapore.